Hello and welcome to Energy Insights, your source for the latest updates from the global energy markets. Today we bring you in-depth analysis across oil, gas, LNG, refined products and energy equities, keeping you informed on market movements, company performance and key geopolitical events impacting energy flows worldwide. So we will cover all these analysis under various segments. So let's dive into our segment one, which is related to the Qatar LNG disruption related latest development via Strait of Hormuz. So global energy markets are entering a phase of the, heightened uncertainty as disruptions emerge in the Strait of Hormuz, one of the world's most critical energy transit corridor. Recent developments indicate that Qatar Energy and with the LNG cargoes from the Qatar Energy were forced to turn back to Qatar after attempting a transit through the Strait of Hormuz, highlighting vulnerabilities in the supply chains at the moment. Analysts note that this could create a short-term logistical challenges for the buyers in Asia and Europe as alternative shipping routes and inventories are recalibrated. The incident underscores the geopolitical sensitivity of the region, with energy markets closely watching developments in the Gulf. Traders are adjusting pricing and risk premiums, reflecting potential delays and heightened insurance costs for shipments passing through the Strait of Hormuz. The situation also raises concerns regarding regional security, as the Strait of Hormuz accounts for nearly 20% of the global oil and LNG shipments, and any prolonged disruption could tighten the global supply and elevate spot LNG and oil prices. Energy market participants are closely monitoring scheduling of the LNG carriers, potential bottlenecks at alternative ports, and contractual impacts on the short-term cargo delivery obligations. So, in our segment 2, we are looking to the India's related latest development. Indian Stock Exchange, National Stock Exchange, NSE, launches a Platts-based crude futures. So, in a strategic move to enhance the price discovery and the hedging options, India's National Stock Exchange, normally termed as NSE, is launching Platts-based crude futures in partnership with S&P Global Energy. This initiative will allow Indian market participants to trade crude futures reference to the global benchmarks, aligning domestic pricing with international standards. Market experts suggest that this could increase liquidity in the Indian oil market and provide a transparent platform for the refiners, traders, and institutional investors. The NEC's adoption of Platts assessment aims to strengthen India's crude trading ecosystem, particularly in the light of the rising imports and the country's ambition to align domestic fuel costs with the global benchmarks. Analysts predict this development may impact the regional crude pricing and hedging strategies, especially for the Middle East and African supplies. This launch is expected to provide several benefits, including more accurate domestic price signals, allowing refiners and traders to better hedge against the global crude fluctuations, alignment with the international trading standards, which may attract foreign investment into India's energy markets, and enhance risk management tools, particularly for corporates dependent on the imported crude, reducing exposure to sudden price swings. Market observers suggest that the NSE's crude futures contract could eventually play a role in the regional benchmark pricing, complementing other Asia-Pacific benchmarks such as the Dubai, Oman, Platts, Singapore, and strengthens India's position as a pricing hub in the broader Asian energy market. Now in segment 2 we are looking to the global energy markets assessment and the latest update. Turning to the global energy markets, crude oil continues to show moderate gains amid supply consideration and market monitoring. Detailed pricing and movements are in the case of the crude, the per barrel price of the WTI remain $112.09, which is an upward moment of $0.55, almost 55 cents, with an increment of 0.49% in comparison of yesterday price. In case of the Brent crude, the price per barrel remained $109.15, which are an upward moment of 12 cents, with an increment of 0.11%. In the case of OPEC basket, the price remained unchanged and it's been $110.63. In the refined product case, the gasoline price per gallon remained $3.24, which is a downward moment of 0.045 cents with a negative moment of 1.36%. The heating oil price per gallon remained $4.38, which showed an upward moment of 0.51%, and in dollar terms it remained 0.022 cent. In case of the natural gas, the Henry Hub price remained $2.82, which showed an upward moment of 0.86%. In dollar terms, it remained 0.024 increase. In the LNG markets, the Japan-Korea marker, the JKM price remained $19.97, with an upward moment of 0.68%, and in dollar terms it remained 14 cents. Similarly, the Dutch TTF price remained $16.98, with an upward moment of 4.68%, and in dollar terms it's 0.76 cent. Crude oil markets are showing modest gains due to OPEC supply discipline and the regional demand expectations, with WTI and Brent holding above $110 per barrel. In refined products show mixed performance. Gasoline is down on the weak regional demand, while heating oil is slightly up on seasonal consumption trends. In case of the natural gas, which remains stable with slight upward movement reflecting weather-driven consumption in the US and inventory drawdowns. In LNG markets, which show an incremental gains in both the Asian index like the JKM and the European TTF hubs, indicating sustained demand amid tight shipping logistics and regional storage management. Overall, the energy market demonstrate upward momentum for the crude and LNG, while a mixed trends for the refined products and stable but firm natural gas pricing driven by supply management, regional demand pressures, and the global market dynamics. From segment 3, now we have to look into the energy companies equity market performance. So major energy equities continue to reflect commodity trends and geopolitical risk, with stock performance tracking global crude and gas movements. In the case of United States, the New York Stock Exchange and the energy sector related entities, the stock performance of the ExxonMobil, the price per share remained $159.08, Chevron $198.67, the BP PLC ADR remained $47.01. Similarly, the S&P 500 energy sector index remained 910.9, which an upward moment of 0.46%. In London Stock Exchange, the energy related sector, the Shell price remained £3 and 54 pence. Similarly, the British Petroleum remained £5 and 91 pence. Similarly, the FTSE 100 index recorded 10,436 points, modestly up, supported by energy stocks. So the global energy sector indicates continue to outperform the broader markets, reflecting sustained investor confidence in the integrated oil majors. Strong crude prices and robust dividends yields are providing support for the equity valuations. Investor sentiment is cautiously optimistic as geopolitical risks such as the Hormuz LNG disruption and supply constraints continue to influence both the stock performance and sector resilience. The equity performance of the energy majors coupled with the energy indices moments provide real-time reflection of the market sentiment, commodity pricing, and risk perception, serving as a vital barometer for the investors, analysts, and policymakers alike. So this concludes our today market update from the Energy Insights. Stay tuned for continued coverage and expert analysis on the global energy developments, commodity movement, and market trends. Subscribe and follow Energy Insights. Stay tuned, and we will see you in the very next episode.